Sur Zoom, vous avez le choix au bas de votre écran entre le parquet.
Sorry, I didn't have English on.
En ce qui concerne notre
There we go.
interprétation, pour ceux qui sont sur
Concerning interpretation, for those of you who are on Zoom, you have a choice to choose English or French. And those of you in the room, you choose the channel that you wish. I would ask all in-person participants to raise their hands if they wish to speak. And we will do our best to maintain speaking order.
through the chair. So pursuant to Standing Order 1082 and the motion adopted on Monday, September 22nd, 2025, the committee shall resume its study on the use of offshore tax havens. Please note that despite the best efforts of the committee clerks, we were only able to schedule 1 hour of witnesses for today's meeting. Apologies to the committee, but that's why we only have 1 hour. We couldn't get more witnesses due to scheduling. I would like to take this moment to welcome our witnesses. Thank you. We have Mr. Jeffrey Loomer, the Associate Professor for the Faculty of Law at the University of Victoria. We have bienvenue à Julien Martin.
Welcome to Julien Martin, Economics Professor at the University of Quebec in Montreal.
Policy for the Tax Justice Network. All virtual witnesses have conducted a mandatory sound check, and we will now begin the meeting. Each of you will have 5 minutes for opening remarks, and then we will open it up to questions. So welcome to our witnesses, and we will begin with Mr. Loomer for 5 minutes. Please, over to you.
Thank you, Madam Chair and members of the committee. Thank you for the invitation to speak to you today about this important topic. Again, my name is Jeff Loomer. I'm a law professor at the University of Victoria. I previously worked in tax practice at a large Canadian law firm, pursued my PhD in international tax as applied to multinational enterprises, and I've been doing research and teaching in that area for the last 15 years. Sorry that I couldn't be there in person today. Tax havens are a fascinating and important public policy issue. They've been central to many of the key themes in international tax policy for a long time, those being international tax avoidance, international tax evasion, tax competition, and tax cooperation. And in the last 15 years, we've seen a lot of movement, a lot of progress in this area. There's still more that could be done, and it's important, I think, to take stock of where we are and what could be done today. I provided some speaking notes, which I think the committee has in English and French. Just a note on tax evasion, although I'm happy to take questions about that. It's not really the focus of my remarks today. I'll just say that we have made a lot of progress since 2009 in dealing with offshore evasion, mainly through enhanced information exchange and Canada's large and growing network of tax information exchange agreements. So that's a positive thing. The focus of my work has been on the much more substantial issue, in my view, in terms of revenue of tax avoidance by multinational enterprise. Now, I'm not an economist, I'm a lawyer, but I certainly follow the economics literature. And, as you may know, the OECD, as part of the BEPS project, estimated the revenue loss, this is back in 2015, of 4 to 10% of global tax revenues, 100 to 240 billion US. Now, Canada, being a relatively high tax country and the 10th largest economy in the world, obviously accounts for a good chunk of that. I don't have exact numbers, but I have provided the committee with charts on foreign direct investment, and that's direct from Statistics Canada, compiled by the Department of Finance. And you can see, if you look at outbound investment, the number one destination is the United States. That's not surprising, about 1.3 trillion. That's the total stock of foreign direct investment there. Number 2 is Bermuda. Number 3 is UK. 4, 5, and 6 are Barbados, Luxembourg, and the Cayman Islands. So what's going on there? If you look on the inbound side, it's more the treaty havens that matter. So Netherlands and Luxembourg and Switzerland, because of attractive treaties and attractive holding company regimes that they have. The difficulty when we talk about tax lost or tax avoided is that you have to compare the tax paid to what you think should be paid under a benchmark system, the right system, which involves difficult questions of tax interpretation. What is the law and how is it properly interpreted according to its text, context, and purpose? I will note that we have made changes to deal with specific forms of tax avoidance through various what we call specific anti-avoidance rules, or SARs. The body of those rules has grown recently as part of the OECD BEPS project. I can get into the details if people want to discuss that, but more the anti-hybrid rules, excessive interest rules, and most importantly, the global minimum tax. However, Canada has a sort of push and pull in our tax policy, particularly our dividend exemption system has been structured to enhance competitiveness of Canadian multinationals. So the rules, far from preventing or prohibiting the use of tax havens, they often facilitate their use and indeed, I would say, encourage the use of tax havens because of a policy of competitiveness. And that's a long-standing issue in Canada. If the government is concerned about the use or what it may see as the misuse of tax havens, see, there's three possible criticisms, three responses. One, you can criticize taxpayers and say their planning is too aggressive, perhaps it's unethical. Two, you could criticize the CRA and say enforcement is not sufficient. In my experience, those two things may occasionally be true on the margins, but by far the most substantial issue is the law itself. If we want to respond to what we see as the misuse of tax havens, we have to think hard about what our tax policy is. As I said, there's a push and pull there, and to draft tax laws that are consistent with that policy and are coherent. So I'll leave my comments there. I'm happy to take questions from the members of the committee. Thank you.
Thank you, Mr. Loomer. Vers Monsieur Martin maintenant.
And now, Mr. Martin, you have 5 minutes. Good morning. Thank you, Madam Chair and committee members. It's a pleasure to testify before you today. My name is Julia Martin, and I'm a professor at UQAM. In Canada, studies that I've participated in indicated between 7 and 9% of corporate tax revenues disappear each year into tax havens. We arrived at a number of 9%, but it's likely between 7 and 9%. That is a significant shortfall, which weakens our ability to fund public services and erodes citizens' trust in institutions and directly harm the interests of Canada, as of many other countries. In this context, I would like to highlight 4 key points to inform the committee's work. The first 3 points are based on my research, while the last addresses upcoming challenges. First point, tax avoidance through tax havens is an extremely granular phenomenon. In a 2018 paper, we showed that French multinational firms manipulate their transfer prices to shift profits to low-tax countries. An important result of this paper showed that there is a significant amount of this transfer, and it is made up by roughly 450 companies and concerns 10 tax havens. Recent research using other databases confirms that a few very large multinationals operating in a limited number of tax havens are responsible for the majority of avoided amounts. So this dimension affects a large number of multinationals, and you need to legislate to address this. Second, tax avoidance does not only affect government revenues, it also impacts the real economy. In a recent paper, we showed with Mathieu Parenti and one other researcher that a company that avoids taxes has a competitive advantage over those who do not avoid taxes, and that allows them to sell more than their competitors. In the United States, we demonstrated specifically that in several sectors, these practices have given a competitive advantage, and it strengthens the dominant position. And what we retain of our second point is that it's just not a question of public revenue, but the real economy. And in particular, it can distort the competition. And so tax policy must be considered alongside competition policy. So tax policy and competition policy go together. And the third point that I'd like to make is that Canada remains poor in terms of research accessible data on tax havens. Studying tax avoidance, the use of tax havens and their implications requires very detailed data. And I've done this with French and American data, but in Canada we don't have enough data to study the issue. Under the OECD's BEPS project, large multinational firms are required to report key information country by country, including sales, employment, taxes paid, and profits. And this data allows us as researchers to better understand what's happening. Canada could follow this path. A number of countries, including the EU and Australia, are making this data publicly available, and that is something that Canada could do as well. These data is already collected, but they are not published by Canada, and that is one measure that could be taken. Finally, my more prospective point is that it deals with international cooperation focused on tax avoidance. Keep in mind that one of the major recent advances made in international cooperation dealt with the fight against tax havens a few years ago, and the OECD framework led nearly 140 countries to agree on a two-pillar solution, the second of which establishes a global minimum tax of 15% on multinationals. The United States, sir, if you could please wrap up. Yes. The United States appears to want to withdraw from Pillar 2. So, and it may bring down this multilateral system. And what we need to remember is that Canada cannot act unilaterally in multilateral negotiations. That doesn't work. We cannot go it alone. And so Canada needs to preserve this multilateral agreement. Thank you, sir.
With Dr. Meinzer, who I would just like to note is joining us from Germany today, and I know really worked hard to make this work for his schedule given the time change. So thank you, Mr. Meinzer, for 5 minutes.
Thank you, Madam Chair and members of the committee for the opportunity to speak. My name is Markus Meinzer, Director of Policy at the Tax Justice Network, a civil society organization working globally to advance financial transparency and tax justice. My work focuses on countering illicit financial flows, including tax abuse and money laundering, through evidence-based policy research and risk assessment. I want to make 3 points in my remarks. First, there's no universally agreed definition or list of tax havens. Labels often reflect geopolitical bias determined by powerful actors rather than objective analysis. Contrary to the stereotype of tropical islands as the primary offenders, our research shows that many developed economies, including OECD members, are central to enabling offshore abuse. We distinguish between corporate tax havens, which enable multinational profit shifting, and secrecy jurisdictions, which provide opacity for individuals. These categories frequently overlap in practice, but they help illustrate different channels of harm. Our Financial Secrecy Index combines a secrecy score measuring...
Notre indice de secret financier combine un score de secret qui mesure la force des règles de transparence avec une pondération à l'échelle mondiale qui reflète l'impact de chaque juridiction pour l'opacité financière. Dans cet indice, les États-Unis occupent la première place, offrant plus de secrets financiers que tout autre pays. De même, dans notre indice des paradis fiscaux pour les entreprises, de nombreux États membres de l'OCDE, et pas seulement les petites juridictions insulaires, figurent parmi les plus grands facilitateurs mondiaux du transport.
Our most recent State of Tax Justice report estimates $27 billion US dollars in revenue losses for Canada from multinational tax abuse between 2016 and 2021, with $13 billion US dollars attributable directly to US parented multinationals. So
Sorry,
almost
Dr.
half of the
Meinzer, I'm
harm
just
is
going to have
caused by
to
US
pause you
multinationals.
for a moment. We're having,
Second,
sorry, Dr. Meinzer, we're having a trouble with the interpretation. We're just going to pause for a minute until we figure that out.
That took you long enough to figure that out. Holy crap. Some wonderful tech they have in the House of Commons. Just the most fantastic people. They never get anything wrong.
Okay, let's try again so you can just pick up where you left off, and members will let me know if there's issues with the interpretation.
Okay, brilliant. So the second point I wanted to make is that the OECD has consistently failed over decades to counter these problems effectively. And the best chance for progress now is at the United Nations. The OECD's two-pillar solution that has already been mentioned was initially presented as a breakthrough, but has been weakened and delayed largely due to the resistance of the United States and its dominance of the OECD. The United States even threatens now economic retaliation against countries implementing the remaining rules affecting US multinationals. Therefore, acceptance of the side-by-side arrangement would undermine the remainder of the global minimum tax by exempting US multinationals, which are responsible for the largest share of the global profit shifting. Side-by-side is reminiscent of medieval emperors who were themselves above the law. They themselves have said for everybody else. The exempt beneficiaries include tech giants closely aligned with President Trump. This pattern is also not new. The OECD has long granted the United States special privileges. FATCA and the CRS are an example. For these reasons, Canada should oppose the side-by-side deal, but no single country can withstand the US pressure, and therefore the only viable route is collective defense of tax sovereignty at the United Nations, with the potential to establish a truly democratic and fair system of global tax governance. Meaningful Canadian engagement is essential to developing reforms that can withstand the pressure from the US and its libertarian anti-tax ideologues. By working with countries such as Germany, Spain, Brazil, South Africa, India, and many others, Canada can help champion a strong, progressive UN tax convention. Finally, the third point I want to make is that Canada can take unilateral steps now to reduce illicit financial flows and protect its revenue base. For example, Canada could extend its public beneficial ownership register to all companies, including those that are formed in any province or territory, and extend it also to trusts. Secondly, Canada could enact public country-by-country reporting to expose profit shifting and strengthen tax compliance. It is gaining global momentum and is a tool for holding multinationals accountable. As has been mentioned before, the European Union and Australia have already legislated for it. It is a safe policy. Thank you for your attention, and I'm very much looking forward to your questions.
Great. Thank you, Mr. Meinzer, and thank you to all of our witnesses for those opening remarks. On va commencer avec Monsieur Lefebvre des Conservateurs pour 6 minutes.
Merci, Madame la Présidente. Je veux saluer les collègues au retour d'une semaine en...
I got off the English video because they were messing up translation.
Colleagues from a variety of ridings, and hello to the witnesses, and thank you for joining us today. My first question is for Professor Loomer. In your speech, you said that the issue is the legislation itself, and that the legislation should be aligned with policy. Can you explain that further, please?
Sure. Thank you for the question. When I say that, I do not have the authority to decide what the policy is. I've looked at these rules a long time, and I will say that the policy has a push and pull to it. And so we have a long-standing rules that allow multinationals to have their dividends come back to Canada exempt from corporate tax. And there are ways that they can minimize their corporate tax elsewhere. So that's a source of a lot of the profit shifting that comes into Canada. But when governments, both liberal and conservative, have tried to enact rules that will stem that practice, those rules don't get enacted. Various reasons: lobbying, pressure from the law and accounting firms on the advice of their clients. But there's a balancing to do to decide, well, do these rules that allow an exemption from corporate tax on dividends coming back to Canada, do they provide a net benefit to us? Is there a net economic benefit? And I think in the 70s, the belief was, yes, we're a net capital importing country. We need this to compete with the US, Germany, and Japan. Do we need that in 2025? It's not clear to me that we do. It's not clear to me that the policy makes sense, for example, to allow interest deductions in Canada or scientific research credits in Canada to fund offshore investment that then results in income that's brought back to Canada with no tax. You get a deduction here, and when the income comes back, you have no inclusion. Maybe that makes sense from a competitiveness point of view, but it requires serious consideration whether that's the right call.
Merci beaucoup.
Thank you very much. Along the same lines, the Prime Minister tried to defend the use of tax havens by Brookfield, and he said that the use of tax havens was a means of guaranteeing tax payment in Canada. Do you agree with that statement by the Prime Minister?
This question is to me? Yes. Thank you. Brookfield and, if you look at other large Canadian multinationals, the largest one, the financial services companies, Brookfield, Manulife, Sun Life, the big banks, RBC, the big energy companies, Enbridge, I would expect that all of them have some tax haven use. Barbados was the traditional choice. It's shifted more and more to Bermuda because 0% is better than 2.5%, and the flight from Toronto is shorter. I expect there's a lot of that in the large Canadian multinationals. It is a normal practice. And as I said, our rules have facilitated and indeed, I would say, encouraged that. So the Prime Minister is right when he says that. Does it result in some net benefit to us? You would say it's a complicated question because you would say that, it's good for everyone who has an interest in the Canada pension plan because Brookfield invests the money and makes better profits because there's less tax paid and perhaps results in more income tax back here eventually when people are withdrawing their pensions. But it's a difficult balancing.
Merci beaucoup. Ma prochaine question.
Thank you very much. My next question is for Mr. Menzer. I'll ask you the same question. Mr. Cochrane, the senior economist, said that the statement by the Prime Minister was laughable, that taxes were paid in Canada using tax havens. What do you think about that?
I'm afraid that I'm not very familiar with the Brookfield case to be able to make an informed statement about this. Usually, I would tend to argue that lowering taxes here in order to gain more revenue is a bad idea, and also enticing the use of tax havens with the aim of increasing revenues here is in the same category for me, not convincing policy. Usually one would expect that the Laffer curve, the long-held belief coined in the Reagan era, that when you are lowering your taxes, then more investment will come, and in the end you will end up with more revenue. It's just a myth and has not been proven to hold true anywhere in the world. The empirical evidence is firmly to the contrary. So when you lower taxes, when you shift profits to lower taxed jurisdictions, the end result will never be increased tax revenue, at least ceteris paribus. It might coincide with another growth effect that would have happened anyway, and you would have ended up with even higher taxes hadn't you not reduced your tax rates beforehand. This much I can say to this case. Thank you.
Il me reste encore. Pardon?
Do I have time left? 15 seconds. Oh, well. Thank you to the witnesses for joining us today.
Monsieur Lefebvre.
Thank you, Mr. Lefebvre. Then to my right, Mr. Letel for 6 minutes. Thank you, Madam Chair.
Man, that translator is really
Thank
loud.
you to the witnesses for joining us for this meeting. It's very useful and very interesting. And there are lots of things for us to work on. But one thing that all three of you mentioned is the need for continuing to think multilaterally. So, Monsieur Martin, I'll ask you the question first, since you haven't had the chance to jump in. Mr. Martin, concerning the need to work together, to ensure that the tax regime established by PEPs after long discussions at the OECD, that is now bearing fruit. How do you see this? That was their fourth point, furthermore. How has this evolved, especially when we see that our neighbors, the Americans, seem to want to withdraw from all of the agreements that their predecessors signed? Thank you for the question. The United States is indeed threatening to withdraw from this agreement. I think the example of the customs tariffs is also important here. It has a huge impact on multilateral international trade. The UK and Japan decided to negotiate individually with the United States, and they all lost. And now Canada needs to decide what it's going to do. But clearly it is a bad idea, particularly in our case where these international operations are working well. But even if the United States decides to withdraw, it's a bad idea to negotiate with them one-on-one. And if we decide to negotiate bilaterally with the United States on the digital services tax, for example, if Canada really wants to make advances, it needs to ally itself with the European Union, South Africa, or others, and to seek out this multilateral cooperation. Thank you. Yes, I think the key to success is to continue to work together. You mentioned the BEPS agreement. And country-by-country data are declared, but in Canada's case, they are not necessarily made public. I agree with you. I think that it should be made public. Could you please tell us, in your opinion, what would be the advantages stemming from the availability of this information, which Canada does hold? What would be the benefit of making it public? Answer. Well, there's transparency, and we know that transparency is part of the solution, but there is simply the fact of being able to study the trend and comparing with other organizations and universities, and look at the amounts managed and the companies targeted, and what researchers need is to look at the profits earned by multinational corporations, country by country. What is the amount of taxes paid in each place? And from that, we are able to say a lot about the trend of tax havens and tax avoidance. And Australia, for example, is legislating to make this data public. The EU as well. They will make the data public slightly differently. And we need to look at the details about what exactly needs to be published. Are we looking at large multinationals or smaller multinationals? And I think that it could easily be done in Canada. Great. Thank you very much.
Sorry? 1 minute. Oh, Mr. Menzies, just a question a little bit out of left field, something that has always fascinated me, perhaps not in a good way. But within the European Union, I mean, how does the Union deal with places like Luxembourg, Ireland, perhaps even the Netherlands? I mean, how does the Union does that?
Thank you very much for the question. I would say there is a certain dose of hypocrisy within the European Union observable, where we can not treat member states in the same way, as the European Union likes to point fingers and label other countries as tax havens. That is a big issue which we are not happy about, and where we are constantly trying to point also out the need for reforms, for more ambitious reforms within the European Union. As for the country-by-country reporting, however, that was a success story that we can show the deterrent effect of country-by-country reporting on multinationals' profit shifting is by 28%.
Thank
so
you,
making
Mr.
them names
Meinzer. We're going to
of
have to
big
leave it there. That
producers.
concludes the time for this round. Thank you, Mr. Letao. On va continuer avec Monsieur Garon pour s'il vous
We'll
plaît.
continue with Mr. Garon for 6 minutes. Thank you, Madam Chair, and thank you to all of the witnesses for joining us today. I'll start with Professor Martin. It seems to be their type of dilemma in one of the points that you raised, namely that often we are presented with current legislation which encourages the use of tax havens, and that is the target of that is to make Canadian multinationals more profitable, competitive. And we know that there's a lot of concentration there are a lot of monopolies in Canada. When we have a country with a large company and it is encouraged to go to tax havens, we are preventing the emergence of smaller, innovative companies. Which of the two versions should we believe? Should we continue to encourage tax havens, or should we try to close the loopholes to allow smaller businesses to perform better? Thank you for the question. I think it's a good way to see things. The point of the paper that I mentioned is really to say that companies that commit tax avoidance have a competitive advantage. Is it systematically used? Generally, yes, but that's not always the case. There are sectors where it can be different, but generally speaking, if we want there to be more competition and healthier competition within a country, we need to ensure that everyone is on equal footing, and that a radical solution is to authorize everyone to avoid taxes, but I think we should really target less avoidance to improve competitiveness. My understanding is that tax avoidance comes with a certain cost. You need tax specialists and accountants, and it's not every SME on the corner that can afford that strategy. Quite right. Particularly tax avoidance through tax havens. There are other ways to avoid taxes that can exist, and that's why I didn't want to completely generalize the results, because the use of tax avoidance through tax havens is one of is available to larger enterprises, but you can see that in sectors where there are medium enterprises who do things differently. But the idea that tax avoidance creates a competitive advantage creates an unhealthy competition. Thank you. I'd like to hear you on the issue of data publication. It seems for one reason or another, we don't do that here. Well, not today anyway. It seems that Canada has a transparency issue. Is my understanding fair to say that if a Canadian company conducts tax avoidance in France, we would know that. But if a French company does tax avoidance in Canada, there is no way to know. Yes, well, what we were able to demonstrate with French data is that we can see the behavior of companies that are in French, including subsidiaries, so Canadian companies that have subsidiaries in France and do transfers. So I'll just jump in, because the question is I want to ensure that I understood correctly. If I would like to know the tax values of a Canadian company, I'm more likely to get that information from the French subsidiary where there's transparency in the legislation. Yes, with what was made public at the EU, and once the data is made public in Australia, you will know more about Canadian companies through Australian data than you will through Canadian data. Thank you. You're forcing me to agree with my colleague, Mr. Letao, that we should make this data public. I hope it will be done quickly. It could be a generational policy, perhaps. Since his election, the Prime Minister has renounced revenue. There was a whole portion of the minimum, that pillar of a minimum taxation and multinationals. And he said, since the Americans no longer want to be in that agreement, our main trade agreement, we are forced to be in lockstep with the United States. I understand that the approach that you are promoting is different. I know that you ran out of time in your opening remarks. What would you do with this second pillar in a context where the Americans wish to withdraw? We need to find alliances. So the risk, if the Americans withdraw, if Canada continues in this position, is that we will be subject to trade reprisals from the Americans. And to avoid these reprisals, we need to have coalitions. We need to do the opposite of what we did for tariffs. We need to seek out allies in the EU, in the UK, in Ireland, and other countries. I just have 15 seconds left. What would you respond to a Canadian government that says we've withdrawn from the minimum tax threshold because we didn't have a choice? Would you believe the government if they said they wanted to come back to it one day? I think that we can do better collectively on the world stage, and we need to confront the United States better than what we're doing right now. We are able to do better. Thank you. Thank you, Mr. Garon.
Kobina for 5 minutes, please.
Thank you, Madam Chair. My questions are for Monsieur Martin. For ordinary Canadians, tax rules are, of course, clear and strict and enforced, and oftentimes there are audits that are done. But for multinational corporations with offshore subsidies, they have the option of using offshore tax havens, which you spoke about them being obviously complicated structures that are costly to put in place, so naturally wouldn't be available for ordinary Canadians or even small businesses in the mid-market space in our economy. On that basis, do you believe that Canada's current tax system treats all taxpayers equally?
Non, mais le système.
The system treats everyone equally, but the question is, can everyone use the system in the same way? And that's clearly not the case. There are companies that are able to pay for accountants and audit services that allow them to manipulate the text. And so, in that way, not everyone is on an equal footing before the law. There are many reasons for that, and Professor Loomer discussed them. Perhaps it's the way that we use the legislation that offers some companies opportunities and not others.
You spoke also about tax avoidance being highly concentrated amongst a few select entities and the impacts of that on our local economy. Can you expand on that?
Oui, donc il y a deux dimensions. La première...
So, if you look at tax avoidance, which is tied to the use of tax havens, that is extremely concentrated in the hands of a few very large multinationals. It's low in most companies. That's the first thing I would say. The second dimension is that if you give a competitive advantage to these very large multinationals because they can conduct tax avoidance and pay less tax than others, well, what you'll do is that you will strengthen the dominance of those multinationals, and they will become even bigger because they are avoiding paying taxes. They will become larger than they were before. You will increase their economic concentration in the economy. And in some sectors, that's been the case in the United States. And I'll refer to the study that I mentioned in my documents.
Thank you for that. Yeah, of course, it's not just about the lost revenue for Canada, but also the impact of competition and the distortion of that competition that you mentioned, which is why it has been very difficult to see the Prime Minister's abuse of the use of offshore tax havens when he was at Brookfield. You also talked about the lack of data publication and what that means. What are your thoughts on that?
Je pense que
I think that Canada and Statistics Canada has a policy on companies. If you look at overseas data that was mentioned earlier, there is foreign direct investment, but it goes to tax havens, and that data is not made public. And I try to get them, and it's just aggregated data among a number of countries, and that sends a signal that the administration has a hard time providing this type of information. Once again, this data is collected through the CBCA, but legislators need to ensure that this data is published, is made public. We need policy in order to do that.
So with that, of course, there is no transparency for Canadians in these aggressive tax avoiders. That would be helpful when even just making legislation to be able to address that issue. So what level
Sorry,
of...
Ms. Kobina, that's time for you.
No
okay, so
Thank
thank you very much. Thank you. I'm going to turn over now to Mr. McDonald, who I understand will be sharing his time with Mr. Sawatsky for 5 minutes.
Thank you, and thank you to the witnesses today. Question for Professor Lomer. You mentioned that parliaments in the past have failed to introduce changes to the Income Tax Act, and you identified the Income Tax Act as being the most effective way to bring about change in reducing tax avoidance. If parliaments continue not to be able to change the Income Tax Act, do you feel things are going to increase in tax avoidance, stay flat, or decrease because of some of the international efforts?
Thank you. I think that the current international efforts really of the last 10 years are reducing the opportunity, the various strategies that one could use to avoid Canadian tax. There has been progress, so without getting all legalistic, but the anti-hybrid rules, excessive interest limitation rules, some of our rules on so-called treaty shopping when we're talking inbound. So they're through those multilateral efforts prompted by the OECD BEPS project, and some on our own, there has been progress. The global minimum tax, again, it's progress. I agree with the other commentators that it's not perfect because we've been forced, one would say, to agree with to allow the U.S. to have this side-by-side system of their own, the so-called GILTI rules. And of course, the Pillar 1, to have a tax on a source-based tax on digital services has just been jettisoned in Canada because of pressure from the United States. So there's been progress. It's come from international cooperation. So I think the global minimum tax, if we can really get there, a 15% floor, it doesn't eliminate tax competition, of course, but it makes moving your profits to Bermuda and paying zero not possible. And Bermuda has introduced a corporate tax of 15 on some multinationals to respond to that. So I think there has been progress, but yes, the fundamental system still has problems.
Okay, thank you. I'll turn over to MP Sawatsky.
Thank you, and thank you, Mr. Loomer. Just a few more questions to build off of what you mentioned in your introduction. You mentioned that the most substantial issue was the law itself, and so I was just wondering if you could maybe touch on a few things that the Government of Canada has taken steps, such as adopting the OECD Common Reporting Standard, developing the Federal Beneficial Ownership Registry, and increasing the CRA audit capacity. Could we build off of these steps to increase the strength of tax laws?
Yeah, I think all of those are good developments. I know my colleagues on the panel have talked about CBC reporting, country by country reporting, and certainly we've had that in Canada since 2016. But they're quite right that it's not public, and I understand the privacy concerns about that, but other countries are doing it, so maybe we'll move in that direction. I guess I don't have strong views on that. Reporting on beneficial ownership is important. I mean, these sorts of moves towards transparency are good. If your offshore structures are legitimate and you say, look, everything is consistent with the text, context, and purpose of the law, then you shouldn't be worried about sharing the information. I understand the privacy concerns and not wanting your competitors to be reading through all your financial statements and everything, and your tax paid. But those information sharing efforts, I think, are a positive thing, both on the evasion side and on the avoidance side. So that is progress.
Thank you. And what would be your suggestions on just perhaps maybe you could summarize what your suggestions would be in a general sense to increase tax laws?
Well, there's many. I mean, and certainly we have, as I mentioned, a variety of specific anti-avoidance rules, and those have increased. And reading them they're very complicated. Reading them is difficult. Trying as much as we can to make those simpler would be a good thing, but it's challenging. I know that, and it's easy to say let's make them simpler, but you're dealing with complicated international structures. Still underlying it, our exemption system favors Canadian-based multinationals, and I would say it's like the best analogy I could give. If you said, look, the speed limit in my neighborhood's too high, it's 60 kilometers, it's too fast, and you decide to pass a law that it's going to be reduced to 40, except you say if you drive a Canadian-made automobile, it's unlimited.
Thank you, Mr. Loomer. Sorry, we're going to have to end it there for time. Thank you, Mr. Sawatsky. On va continuer avec Monsieur Garon pour 2 minutes et demie.
Merci, Madame la Présidente.
Thank you, Madam Chair. I'd like to ask a question to Mr. Meinzer. At Canada Revenue Agency, there is a regulation of the Income Tax Act which sets out a tax exemption on repatriated income from zero income tax places unless there's an accord, and even if there's an absence of economic in that territory. What they're saying is that you don't have to pay taxes if you're honest enough to tell us that you're scamming us in a way. And I understand that your organization had assessed that the gap that Canada had to address could be between $8 and $9 billion a year. So I would like to know, why are there provisions like that one in existence? Professor Loomer, I see you smiling, and I'd like to ask for him to answer this as well. And why does that exist, and why don't we simply repeal that provision?
Thank you very much for the question. Was it to to me, or was it to you, Mr. Loomer, the question?
Je vais commencer par Monsieur Meinzer.
I'll start with Mr. Meinzer and then Professor Loomer, both.
Okay, thank you very much. So I think the reason for this is the widespread belief that lowering taxes will increase in the end economic activity, attract the greenfield investment, the kind of thing that everybody wants: new factories, new research, new jobs. And what we, however, see in the data over the last decades is that what you achieve with lowering your taxes and exempting, for example, foreign dividends is part of that policy is you attract at best profit shifting activity, so phantom investment. The IMF is calling phantom investment a good share of the global FDI data that is not made up of what we usually believe is the greenfield investment, but it's merger and acquisition, or it's debt loaded onto companies, which will then reduce the tax base and erode, therefore, the tax revenues. So what I think is a policy to attract investment has been followed by Germany, for example. They also exempt the foreign dividends from when repatriated. I think you should switch this off to a credit system that is a simple policy. Many countries have this in place. It's safe. It still ensures that you are not double taxing any multinational activity, whether it's abroad or domestic. So you treat equally the economic activity, whether it's here or elsewhere. And I think switching from dividend exemption, even if it's subject to certain conditions, a treaty or something in place.
Thank you, Mr. Meinzer.
Le règlement, Madame la Présidente.
Il y a plus de temps.
Je demande
Sorry, your time is up. I ask for unanimous consent to allow 1 minute to Professor Loomer to answer this question.
UC to allow 1 minute for. As long as it's not taken off my. Well, then we need to have UC as well to extend the meeting for a couple more minutes.
Pour 1 minute.
Yeah. Okay, well, a couple more. Okay, wait. One more minute.
Professor Loomer, vous avez 1 minute.
Professor Loomer, you have 1 minute.
There are things we have done. The enhanced general anti-avoidance rule, new other rules. And there is a report just last month from the OECD about the progress of the BEPS project in the last 10 years, quoting a lot of good economic data, mostly by European economists. And it shows there has been progress. If you look at the ratio of profits to employees in a jurisdiction, it's better. It's not perfect, but it's better than it used to be, which means you have less profits in places where it's just a letterbox with no employees. So that's a positive change. What else could Canada do to improve its system? And if we want to stop or limit the use of low tax jurisdictions, the global minimum tax will help. But I mean, I could send draft amendments to the Income Tax Act 21C on interest deductibility, 95.2A on income characterization.
Thank you, Mr. Loomer. That concludes the minute.
It won't be adopted.
So, thank you. Okay, Mr. Kelly for 5 minutes.
Thank you. And Mr. Loomer, I'm going to stay with you. And in your opening remarks, you spoke of the different investment destinations and the countries of origin for Canadian investment, and a chart was circulated. I want to just make sure this is included in the record, though. So, if I understand this correctly, the amount of money that Canadians invest in the United States in 2024, the total of investments from Canada to the United States is $1.3 billion. In reverse, American investment in Canada is $683 billion. Is that correct?
On the outbound, it's 1.3 trillion. So 1,289 billion, and on the inbound side, 683. So yes, we're a net capital exporter by a large margin.
Huge margin. It was $606 billion. That's the net amount that we are exporting to the American economy. Is that correct?
That's right.
Wow. That's actually a lot worse than the next most recent numbers that I had been aware of. Although it would seem to be accelerating in that the net investment deficit since the Prime Minister, beginning at the beginning of the fiscal year, which is roughly when the Prime Minister was sworn in, is another $50 billion. Perhaps I won't get you to comment on that. I'll just go to. In fact, I want to go now to Professor Martin and pick up where Ms. Kobina left off around legislated solutions and data deficiencies in Canada. There have been repeated attempts in Parliament to compel the CRA to actually give information to the Parliamentary Budget Officer so that the Parliamentary Budget Officer can independently measure the tax gap in Canada. Are you aware of Senator Percy Down has been the champion of this. Are you aware of his work?
Non, je suis pas au courant.
So,
No, I'm not aware of that.
had proposed, and this was even moved in the House of Commons in the 42nd Parliament, was that anonymized tax data requested by the PBO be released to the PBO so he could independently verify the tax gap. Would that be helpful for legislators and policymakers if we could actually measure the tax gap in Canada?
Oui, tout à fait. Je pense qu'une manière de...
I think that one way to find a consensus is to say that for very large multinationals, these data will be published in Australia and the EU in any case, so we could ask for the same thing in Canada. What becomes more complicated is doing that for all companies, but as I explained at the beginning, tax avoidance tied to tax havens is carried out mostly by the very large multinationals. Perhaps instead of focusing on all companies, you could just focus on the very large multinationals who are doing it.
When it comes to the very large companies, the Auditor General reported as far back as 2018 that if a company has an offshore bank account or offshore dealings, that they would be given months or even years to comply with orders from the Canada Revenue Agency, whereas a normal Canadian with only domestic dealings, whether it's a corporate filer or a personal filer, must comply within 30 days or automatically have the taxes assessed if they don't comply. Is that a fair system where an offshore filer is given months or years or even just have the taxes struck when a normal small business, say, tax filer in Canada, will automatically have their taxes assessed if they can't comply with the CRA within 30 days?
Encore une fois, je pense que regarder...
Once again, I think if you look internationally, it's interesting if we could try to have the same type of requests of these multinationals as what is done in Australia and the EU, that would be good. And if we were able to ask for that information from the large multinationals, there's no reason, if they can do that in the EU, there's no reason why we couldn't do that here as well.
Okay, thank you, Mr. Kelly. Mr. Turnbull for 5 minutes.
Oh, not Turnbull.
Thanks, Madam Chair, and thanks to all the witnesses for being here today. Great conversation and lots of great testimony here. Mr. Loomer, Professor Loomer, I'll start with you. I wanted to ask you about, I know you've made comments in the past about the general anti-avoidance rule and how it's historically failed to meet perhaps its intended purpose. Hope I'm not mischaracterizing your comments, but I took that from something that you've said in the past. How do you assess the government's recent changes to the GAR, including the introduction of a 25% penalty, which was included in Bill C-59, which was the fall economic statement?
Thank you. Yes, that is an accurate summary of what I've said in the past. There are, the GAR is notoriously difficult to apply, and there's circumstances where it has, domestically and international, to domestic or international transactions, and there's many circumstances where it hasn't. And if you look at the academic commentary in Canada, generally says, look, the GAR has not really done what it was intended to do. Particularly the writing of Brian Arnold, who's been involved since the beginning in the GAR. So the recent changes, effective 2024, including a penalty, a new economic substance test, it's too early to know. Will it change the way cases are decided? I think the general feeling among at least Canadian law academics, tax law academics, is that it's a step in the right direction, and that taxpayers will have to think a little more carefully. The calculus changes when there's a penalty. It's not just, oh, well, let's try it. And if a court decides that the GAR applies, well, we've got to pay the tax. We would have had to pay the tax anyway. The only penalty right now is a bit of interest. I say interest could be significant, but adding a penalty, that does change the calculation. And so one has to think hard about whether this transaction is consistent with the policy or undermines the policy.
Okay, great. So it sounds like it's a step in the right direction. I'm wondering, I know Budget 2025 also includes intentions to modernize Canada's transfer pricing rules to better align with the international consensus on the application of arm's length principle as reflected in the OECD guidelines, transfer pricing guidelines. One aspect of that is to introduce new rules that provide more detail on how cross-border transactions between non-arm's length persons must be analyzed, including new transfer pricing adjustment application rule and a new definition of economically relevant characteristics. Would you say those are also steps in the right direction? Would you care to comment?
Yes, thank you. I agree with you. These are, there's been consultations on these changes for a few years now in response primarily to the Cameco case, the Iranian company case, and the way the Federal Court of Appeal interpreted the rules. And so, it's a move to modernize our transfer pricing rules more in line with the OECD guidelines and what some other countries are doing. I mean, it's new and it's just proposals, so time will tell. But it seems from looking at it at 100-foot level, it seems to be a step in the right direction. Yes.
Great. I know my time is going to run out, but I note you also made comments in the past about some of these, the GAR in particular, but some of the corporate tax avoidance rules, not being all that effective, but us needing to have a more principles-based approach to drafting tax legislation, and that you've said that would be preferable. I wanted you to maybe go through, why you've said that and what does that really look like from your perspective?
Yeah, I could talk all day about principles-based legislation, but it makes a lot, and I'm not the only one who says that. I think it makes a lot of sense. You'll hear, tax lawyers in practice from private firms or justice say the same. It means thinking hard about what your principles and policies are and then drafting the legislation to match that, rather than a scattergun approach with all these rules that point in different directions. Because as Professor Lee said in a previous meeting, you have an anti-avoidance rule, it's a double-edged sword, because you say, oh, I can't do A, B, C, or D. Well, I'm going to do E that isn't covered by the legislation. And so thinking about what the principle is, for example, your principles on interest deductibility.
Thank you. Thank you, Mr. Loomer. That concludes the time, although I'm sure many of us would like to hear more about that at some point. I would like to thank, it's okay. I would like to, on behalf of the committee, thank all of the witnesses present today. And with that, look to the committee members to adjourn the meeting. Yep. Okay. Have a great day, everybody.
Wow. I feel like she did that on purpose. She let the witnesses speak for like the first 28 minutes. So we got basically a couple rounds of questions and that was it. Absolute craziness. And I don't know how they couldn't have scheduled more witnesses so that way it was a 2-hour committee. That was a 1-hour committee and on a big topic. You could have very well fit in a few other witnesses. You could have asked Moose to come back because Moose was asked to come and with only like 24 hours notice, he wasn't able to attend. So just ask him to come back again. You could have had him speak for the first hour. There's many other witnesses that could have spoke, but anyway, I think I've put the link in chat for question period already. There it is again. We're going to take a break until question period. Carney's going to be there. We've got a big day. And then after that, we're taking quite a long break for a few hours until the budget. There are a couple committees on in the afternoon, but nothing's really that spicy, so we're not going to cover any of them. We're just going to watch question period and then watch the vote. And the vote won't be till about 6:30, so we'll go live at 6. So 2 till 3 for question period, take a 3-hour break until the vote, and then we'll watch the vote. But there is the link for question period, and I will see you guys shortly. See you guys in about 50 minutes. Cheers, guys. Thanks for watching. Oh, and before we go, thank you so much, Raven, for the 14 months. That's crazy. I can't believe I've had memberships on for 14 months. Feels like I just turned them on yesterday. But anyway, just me, Nicole, thank you so much for the super chat. And everybody watching, I appreciate you guys. Okay, now we go. See you guys soon. Cheers.